Welcome to Facts Not Forecast, your daily edge in the stock market, facts, insights, and opportunities you won't hear anywhere else. This week, Cathie Wood's ARK made some bold moves, completely exiting DraftKings and trimming Adaptive Biotechnologies and AeroVironment while quietly pumping over $30 million into digital asset plays like BMNR and Bullish. Is this the beginning of a new conviction bet on crypto infrastructure or a risky contrarian move? Let's break it down.
Okay, let's jump right into this deep dive. We need to talk about this portfolio reshuffle. It really feels like they're clearing the decks. The biggest headline grabber, maybe, was DraftKings, DKNG, ARK just dumped the entire position. Gone. That was a pretty sizable holding in ARK, wasn't it? What signals were they seeing to just completely jettison it like that?
Yeah, it was significant. And DKNG was definitely flashing some warning signs that ARK tends to react to, especially when they might be looking to free up capital. If you look at the numbers around mid-October 2025, the stock was really struggling, down almost 29% just in the last month, but down about 14% over the last year. That's some serious negative momentum.
And the technical analysis, it was basically screaming strong sell, both for the immediate term and the 1-week outlook. So ARK's move looks like a classic reaction to that kind of volatility and strong negative technical pressure. They essentially cut their losses, right? Pulled capital out of something stuck in a clear short-term downtrend.
Right. Makes sense from a technical standpoint, a clean break. But they didn't just sell DKNG. They also trimmed other positions like Adaptive Biotechnologies, ADPT, and AeroVironment AVAV. Were those also distress signals? Or is something else going on there?
Not necessarily distress in the same way. With ADPT, it's a bit more nuanced. If you look at the fundamentals long-term, they're messy. You know, net income, TTM is negative, around minus $160 billion. EPS is negative too. But, and this is the key thing, despite those underlying issues, ADPT stock had been absolutely on fire. It was up, 211% over the last year?
211%. Okay.
Exactly. So when you see them trim a position like that, which is a decent size, around $45 million in ARKG after such a huge run-up, it looks much more like taking profits, cashing in some chips to fund whatever's next.
Got it. So capitalizing on success there. And AVAV, similar story.
Pretty similar, yeah. Like just freeing up a bit more capital from a position that had, done its job or maybe wasn't central to the next big push. Less dramatic than the ADPT trim.
Okay, so this brings us to what you called the narrative bridge.
Yeah.
It wasn't just panic selling everything. It was more like, okay, DKNG looks technically weak. Let's cut that. ADPT had a massive run. Let's take some profits. The big question then is, why? Why sell these growth names, even the volatile ones, to pivot so hard into something, completely different?
Exactly. It was strategic. It wasn't just running from something. It was running towards something specific. They took capital out of stocks facing maybe short-term technical issues or perhaps regulatory headwinds like online gambling with DKNG, and they moved it very decisively into the digital asset space.
Okay.
This wasn't a flight from risk overall. It was a pivot toward a very specific kind of risk, a high-conviction bet.
Right. And that's where BMNR and BLSH come in. This is the new conviction buy. We saw the news, September 6th. ARK snapped up $23.5 million across BitMine Immersion Technologies, BMNR, and Bullish, BLSH. And then just a bit later, another $4.3 million into BMNR specifically. That makes BMNR feel like the core of this pivot. So what exactly is BitMine Immersion Technologies? What do they do?
Okay, so BMNR operates at, the foundational level of the crypto world. Think infrastructure. Their main business is industrial-scale crypto mining, mostly Bitcoin. They also sell mining equipment and offer hosting services. They're trying to position themselves to benefit from things like the Bitcoin halving cycle, potential margin expansion for miners, and maybe clearer regulations down the line.
Okay, mining, equipment, hosting, standard stuff in
Yeah.
that space. But the sources really highlight something else, something about their treasury. That seems to be the real picker here.
Oh, absolutely. This is where it gets wild. BMNR has become a major holder of Ethereum, a huge ETH treasury firm. As of early October, they reported holding over 2.83 million ETH.
Wait, 2.83 million ETH.
Million, yes. And just to give you some scale on that, that's more than 2% of the entire circulating supply of Ethereum.
Wow. Okay, that's staggering.
It is. And their total crypto and cash holdings, around $13.4 billion.
$13.4 billion.
Yeah. So ARK isn't just buying a mining business here. They're buying exposure to this colossal Ethereum balance sheet. It's almost like a proxy bet on ETH's future value.
And you mentioned Thomas J. Lee is involved, chairman and an insider buyer.
Right. He's a well-known name in crypto circles. His involvement and the fact he's buying shares himself definitely adds another layer to the story. Sends a signal.
So this gets us to that picks and shovels idea. Instead of just buying Bitcoin or Ethereum directly, ARK is buying the company that mines it, services the miners, and holds a massive amount of the asset itself.
It's sort of a double bet, isn't it? You get the operational leverage of the mining business, if it scales, plus the direct asset leverage from that huge treasury.
And that double bet seems to explain the crazy risk-reward profile.
Absolutely. Look at the stock performance. BMNR is up something like 573% year to date, over 500% in the last year. Huge gains, but it comes with extreme volatility. The beta recently spiked as high as like 14.85.
14.85, that's incredibly high.
Off the charts, but that's exactly the kind of hypergrowth, high volatility profile ARK often seeks out in these speculative plays. They're betting this leverage pays off massively if the crypto market turns strongly positive.
Okay, I have to push back here a bit, though.
Yeah.
You said they sold DKNG partly because it looked too risky technically in the short term. But how do you square that with jumping into BMNR? Because the fundamental risks here, they look absolutely terrifying by any traditional measure.
That's a fair challenge, and it really gets to the heart of how ARK might be defining value, or perhaps potential in this case. Because if you look purely at BMNR's operating business right now, it's problematic. The trailing 12-month revenue is tiny, only about $5.45 million.
$5 million revenue with a multi-billion-dollar valuation based on the Treasury.
Exactly, and net income is negative, about minus $6.5 million, which leads to this absolutely astronomical price-to-sales ratio. It's sitting at 2,741.
2,741 PS.
Yeah.
Pause on that. Normally, a PS over 10 on a growth stock is considered really high, right?
Yeah.
Speculative.
Extremely high, yeah.
So 2,700, I mean, how does anyone even begin to justify that based on $5 million in sales?
Well, you don't. Not based on current operations. The only way that number makes any sense is if you believe that $13.4 billion crypto treasury isn't just going to hold its value, but maybe multiply significantly. Essentially, ARK bought a highly leveraged call option on Ethereum and Bitcoin wrapped in an equity structure. That's the bet.
But that leverage cuts both ways. You mentioned governance and shareholder risk.
Big time. The companies face short seller reports, which raises questions. But the most jaw-dropping number is the shareholder dilution.
Right. Let's talk dilution. The source material mentioned shares outstanding grew by over 11,000% in the past year.
11,000%, yes.
What does that even mean for an investor?
Yeah.
11,000% dilution.
It means, imagine you owned a slice of the pie. Now, that pie has been cut into 110 times more slices than before. Your ownership stake gets massively diluted. Even if the stock price goes up, your actual percentage of the company shrinks dramatically.
So they're essentially printing shares like crazy.
It appears that way, likely to fund operations or maybe acquisitions or just raise cash. ARK stepping in now is aggressive because they're buying into that heavily diluted structure. They're betting the future crypto gains will be so enormous they'll overwhelm that past dilution. It's a huge gamble on timing and magnitude.
And then there's the operational footprint. For a company supposedly managing $13.4 billion in assets, the sources say they have 7 employees.
7, yes.
7 people.
It paints a picture, doesn't it? Minimal operational leverage, maximum financial leverage tied directly to crypto prices. This isn't a bet on them building a huge, efficient mining operation tomorrow. It's a bet on the value of those digital assets they hold, managed by a tiny team. More like an asset management play than an industrial operation.
Okay, so BMNR is the highly leveraged, high-risk, treasury-focused bet. How does the other purchase, Bullish Inc, BLSH, fit into this? Is it just more crypto exposure?
It's complementary. Think of BLSH as the market infrastructure piece. They run a digital assets exchange for both spot and derivatives trading. Critically, they also own CoinDesk.
Ah, CoinDesk. So data, news, indices.
Exactly, the information flow. So if BMNR is the bet on creating and holding the assets, BLSH is the bet on the trading, the data, the plumbing needed for the institutionalization of the crypto market. It helps mainstream players get involved.
Got it. That makes sense strategically. BMNR for the raw asset exposure, BLSH for the market maturation and trading infrastructure, sort of hedging the bets within the crypto space.
You could see it that way. And BLSH, interestingly, has analysts forecasting pretty strong earnings growth, something like 45% per year. Now, the stock is still volatile, don't get me wrong, high weekly swings. But it adds a layer of perhaps a more traditional growth narrative alongside the pure asset play of BMNR.
So, pulling it all together, this looks like a very deliberate, very concentrated high-risk pivot, selling off some growth stocks showing weakness or after big runs, and applying that capital into the back-end infrastructure of crypto.
Extremely decisive. And, it really does echo some of ARK's historical big calls. Think about their early aggressive stance on Tesla back in 2019. They often make these huge, concentrated bets before the trend is obvious, before the mainstream money really flows back in.
So they're trying to front-run the next potential crypto cycle here.
That seems to be the thesis. They're looking past the current operational weaknesses of BMNR, the crazy PS ratio, the dilution. They're saying the potential upside from a crypto supercycle leveraged through that treasury outweighs all those fundamental red flags right now. They want maximum exposure before it takes off.
It's pure positioning, trading maybe more conventional operational risk in names like DKNG for this highly leveraged digital asset exposure via BMNR and BLSH. A fascinating, if incredibly risky, move.
Absolutely. It's probably the clearest signal of a major conviction shift we've seen from ARK in quite some time. Betting on the infrastructure and the underlying assets before the next potential gold rush really begins.
Would you follow ARK into digital assets now, or wait for the next crypto rally to confirm the move? Let us know in the comments. Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.